Hi and welcome to the January 23 update for Forager Funds Management. I'm Steve Johnson, Chief Investment Officer here, and January was a very strong month for equity markets around the world. The ASX All Ordinaries Index was up 7% for the month. The MSCI World Index was up 3% in Australian dollars, despite the Aussie dollar itself being very strong. Some encouraging inflation numbers out of the US suggest that the worst of the interest rate rises might be behind us, and that has given investors a lot of enthusiasm, particularly about the stocks and sectors that performed worse in 2022. A lot of investors were seemingly caught on the wrong side of this trade, with sectors like the building materials sector, for example, performing exceptionally strongly, despite the fact that we are almost certain to have a more difficult year ahead of us. Moving to our Forager Australian Shares Fund, where the performance for January was roughly in line with the index and takes the financial year-to-date recovery to some 24% since the 30th of June last year. We had a number of stocks releasing their quarterly cash flow statements prior to their half-year results due to come out in February, and it was a mixed bag on that front. Whisper's cash receipts for the December quarter were a touch better than September, but still well below what the company suggested was recurring revenue just back in August. Big Tin Can, on the other hand, released an update that suggests its progress towards its full-year targets is well on track. The half-year number is more than halfway there, and this is a business where the growth is usually accelerating in the second half of the year. Given the company knocked back a takeover offer at 80 cents and subsequently raised capital at 60, it's got some reputational damage to recover. Small health practice company Healthier released some encouraging trading updates as well. This company's share price had waned through September and October after releasing a fairly weak first quarter result, but the numbers into November and December put it well back on track to meet its full year guidance, which would make the stock look very cheap. And on the takeover front, the battle for Nitro is reaching its conclusion. Both of the bidders for this company submitted proposals to the takeovers panel to try and scupper the other party's bid during January, but the takeovers panel wasn't having much of it. There were no new bids, but this game is coming to its end point. The first week of March is when the deal will expire. The best on the table is from Alludo and Potentia. The second bidder now has just a few weeks to put its best offer forward. We're hoping for a little bit more there, but this one is reaching its end game. And the end game has been reached at MSL Solutions, with 98% of shareholders voting in favour of that company's takeover offer at 29.5 cents. It's been a modest return from our initial investment here at about 20 cents a share, but a dramatic improvement from when the share price was 4 cents just a couple of years ago. It's a stock we've been particularly activist on and agitated for change at both the board and management team, and the new team that's been in there for the past few years has done a wonderful job turning this business around and ultimately selling it. So a tick there for us on the activism front. Moving over to the International Shares Fund, where it was a very strong month of performance with the unit price jumping 7% despite that strong Australian dollar. And the stocks that performed worse in 2022 were many of the best performers during the month, including Meta, Open Lending and Cryoport. Meta's share price jump was subsequently franked with some good results released after month end, but we'll talk more about that in the February monthly report. There wasn't a lot of other news, with most companies due to report over the coming few weeks, but Flughafen Wien, the owner of airports in Vienna and Malta, did release a trading update that suggested its profitability is improving dramatically as tourists start to come back. This company was under a takeover offer, or still is under a takeover offer, from Australian infrastructure investor IFM, which we were very underwhelmed by. The good news about this trading update is the shares are now trading above that takeover price, and we're getting increasingly confident that the liquidity that IFM was trying to take away from other investors is not going to be a problem. Over in the UK, however, times are still tough for used car supermarket company Motorpoint. This was a growing and profitable business for a very long time, but the past few years have not been kind to it. First up, a lack of new car supply has curtailed supply of its cars, typically in the 0 to 4 year old range. Secondly, used car prices are now falling, which impacts its profitability. And thirdly, a new online-only competitor, Cazoo, had been raising extraordinary amounts of money and spending that money competing with Motorpoint and other players in the market at unsustainable rates. The good news is going to take a few years at least on the supply side of things. We're only now starting to see new cars supply increase significantly, and that will flow through to Motorpoint over time. But Cazoo's got some problems and announced over the past couple of weeks that it is significantly curtailing its growth expansion plans in the UK, and in fact intends to sell less cars in 2023 than 2022. That should be good news on the competitive front, but we're still expecting this company to take a while to recover. There'll be lots more news to report as our portfolio gets out there and reports its results over the coming month, and we're fully expecting some that back up what has been some good short-term performance over the past couple of months. Thanks for tuning in, and we'll see you next month.